Hey, this is the Crush It Trade recap show for August 20th, 2024, and we crushed it live today, $23,290 on AMD. This was a little bit more of an advanced trade. Let me see if I can try to explain this to you. The first thing that happened when I sat down at my desk this morning, I noticed that AMD was trading outside the Bollinger Bands, or at least the price was right around the open or before the open. And so that was on my watch list right away. And usually when you're outside the bands, you might get a push up and then it's going to come back down. Price is always going to gravitate back to the inside of the bands. And we can talk more about that later on a different video. But for right now, I want you to focus in on the fact that the price was outside the Bollinger Bands. It caused me to look at the 1 hour to see where price was at. And there, we were well inside the bands at that point. And so my job was to sit and wait and see what happened to AMD. As you can see, AMD was quite strong out of the open. We had 1, 2, 3, 4, 5, 6 green candles in a row, about what, 945-ish, 940-ish. So that was a really good, strong trade. Still wasn't in my wheelhouse. I wasn't going to jump in on this FOMO right here. But what I did do is I was expecting a pullback at some point. So when price got into the crush it zone here on the 5-minute, I moved my eyes over to the 1 minute to try to see if I could find myself a entry. And so what I did is I kind of took a little bit of a chance. I got in early right at the crush it zone right here. And the only reason I got in early was just based on what I seen up here on the daily, okay? So this is 955. I got in here. I sold half down here right away. And I didn't expect it, but it went up even higher. So you can see it bounced up, went up higher. And normally I would have gotten out on this trade, and I preach it every day. If it's acting funny and it's not doing what you want it to do, when that candle closes above, you get out. So you can see in the 5, it closed above. I decided to stay in the trade, and so I stayed in the trade. And the reason was, and let me move this over so you can see this, right? I had, and that was actually right in here. I have this modified MACD. I call it the momentum oscillator. You can see how far in the sell zone it is. I have it marked out with a buy zone and sell zone, and we are way outside into the sell zone there. And being that the daily, and at this point, the 1 hour was the body of that candle was way outside the Bollinger Bands. And so I knew that was going to come back in. I just had to figure out where was it going to come back in at. And, you know, the deeper that this gets out, so you can see this here, the deeper that this gets outside that zone right here, the more apt you are going to get a bigger pullback. And being that the daily was also way outside the Bollinger Bands, and the 60 minute or the 1 hour was way outside the Bollinger. I mean, it was way outside. And, you know, I was going to hang in. I wasn't going to bail out that quick on this trade simply, you know, just because of the 1 hour and the daily. So that's why I decided to stay in the trade right about here. And when we got up here, what I did is I doubled down, and I sold half of that double down right here at the bottom of the crush it zone to finance another trade to the upside if I needed, or I would hang on to it and start scaling out at the bottom of the crush it zone, and then we'd start moving down. But guess what? Impulsive candle to the upside, and we started to move up. So what happened once we got up here, I think it was on this candle here, I added another 500 and some contracts. And at this point, I needed to figure out, hey, what was happening? You know, where are we going to get this turnaround? Because we're way outside the bands on the 1 and the daily. I knew it was going to pull back. I just didn't know exactly when. So what I did is I pulled on the 5 here. I pulled the 50% mark in between these zones right here. So I wanted to figure out what that was. And I wanted these 5s to close underneath that 50% zone. And then also, I wanted to check and see if we were going to possibly move up to the next level right here. And in order to do that, what I had to do is come over to the 1 minute chart, right? And I had to add in, I'll show you here, I had to add in some custom Fibonacci extensions. They're not custom, it's just, you know, it's all fractal. So I don't want to call it custom. I mean, the Fibonacci sequence is what it is. But what I did is I took this impulsive candle and I put the extensions out here, and I got the crush it zone in this area right here. Okay, so I knew that if I could keep this 5 minute below the 50%, and we're in this crush it zone here, that there's a good chance that was going to be my turnaround point. And, well, it was. So you can see we have another impulsive candle to the downside on the 1 minute. And I didn't get green on this trade until we got, right below the Fibonacci level, this red line right here. Or you can look at, the bottom of this level right here, the 50%. When I got below that right in here, right about the 20-day, I was green. I did not scale anything at that point. It came back up. I was expecting a retest on the 0.618 level right here, the smaller level that I put in here to try to figure out what things were going to turn around. We didn't get quite the touch I was looking for, but it ended up going in my direction. And when we got back down here, I got green again. I did not take my first scale on this. Let me get rid of this here. I didn't take the first scale until we got down to the top of the crush it zone, then the bottom of the crush it zone, and the 0.618 level, and then at the 0 line. And then I took a little bit more down here on a different level I had for a 0 line to mark the other side of the trade, the momentum. And at this point, I was hoping we'd get down into the 0.382 level, which we didn't get down to, and then it ended up stopping myself out right here at about 11:30 with $23,290. So what a kick butt trade! A little bit more of an advanced trade, but it was a really good trade. And I wanted to show you. Look here. If you were going to get this momentum move to the upside on AMD, it'd have been worth about $4.81 roughly from the bottom of the move to the top of the move. You probably wouldn't have gotten in down here just because it was right out of the open, and most people aren't going to jump into a trade on the open thinking that AMD is, going to the upside. So I think what a lot of people did is they traded AMD and it got to high a day here, and then if we go back on the one, I think you can see we kind of had like a little bit of a retest here for a move up higher. And so a lot of people probably took that trade. And once again, where would you be scaling out? Well, you'd scale out at your Fibonacci levels, 0.618. Here you have the crush it level right here. You have another level up here. You can see how they're all reacting to these levels. This isn't really needed in here anymore, but that's where you would have scaled out of it. But I don't trade those trades. I trade the crush it trade strategy. To me, it's a highly probable trade. It's just a better trade. To me, it is. So that's why I did not trade AMD to the upside out of the open. So with that said, I want to switch charts over here to the watch list and show you that, the crush it trade strategy did take place today. It took place on Tesla, and we call it the crush it trade strategy because it's a highly probable trade that takes place in the crush it zone every day on one of these 6 tickers. I promise it does happen. And this trade was worth $2.18. And that was probably worth $80 to $100 per contract, roughly. And the cool thing about this strategy is you have a very clear and concise entry in here and a very clear and concise out. So you can scale out at the 0.618 and the 0.382 levels right here. And if price moves back down again, well, you know where to get out, right? So this is a really good strategy. And I know looking at this, you're going to look at the chart and go, hey, the bigger move was to the downside. Well, yeah, of course it was. Just like, AMD, the bigger move was to the upside at the open. But, how do you know what it's going to do? You just don't. You can't predict that. But what we can do is we can set our intraday markers, right, our Fibonacci sequences and our markers in here, and we can now predict what price is going to do based on that, because 90% of the time, it's going to react off of those levels, and it does. And so that's what the crush it trade strategy is all about. It's taking highly predictive trades. And this right here is a lot more predictive than Tesla moving to the downside. There is a couple other advanced crush it trade strategy crush it trade strategies in this group right here, but I'm not going to get into it right now. I'm going to try to get a video out later tonight or tomorrow that talks about the advanced crush it trade strategies on these, and they're based on the 1 hour level, not the intraday markers here. And that'll be a really good video, so stay tuned. If you want to learn more about the crush it trade strategy and figure out how you can put more cash in your pocket on a daily or weekly basis, tune in Monday through Friday from 9:30 to 11. Crush it trades. I guarantee it. You're going to love it. It's an awesome strategy that works almost every single day. All right, guys, take care. Have a good night. We'll see you tomorrow morning, bright and early, 9:30. Talk to you soon.